Good day everyone, this is your teacher Ma'am Aduko, and for our subject Fundamentals of Accountancy, Business and Management, I will be discussing the Book of Accounts. And let me give you first our learning competencies. Identify the uses of the two books of accounts, the journals and ledgers. And the other one, illustrate the format of a general journal. So for this tutorial, I will be discussing first the general journal. Accounting is a service activity and has been called the language of business. Accounting terms and concepts are used in statements and reports submitted to interested users, the owners, investors, creditors, government, and business analysts. And according to the definition of accounting, accounting is the process of identifying, recording, and communicating economic events of an organization to interested users. And from the definition, where do we record the transactions that we have identified? What are the tools that we use to document these transactions? And then, how important are these records in accounting? So as we go on with our discussion, we will be able to answer these questions. The journal is the accounting book wherein the business transactions and events are recorded for the first time. The journal is called the Book of Original Entry. There are various kinds of journal records. Some of them are the cash journal, sales journal, purchases journal, and the general journal. The number of journals to be used in every business is dictated by the size and needs of the business. A journal record may contain only one money column, or two money columns, or more than two money columns. The number of money columns in any journal is dependent upon the information to be recorded therein. Journals may be loose-leaf or can be book-bound. The simplest form of journal record is called the general journal. And the process of recording the business transactions or event in the general journal is called journalizing. Transactions of the company are journalized in chronological order in general journal. And for each transaction, the general journal provides spaces for the recording of the following information: the date of the transaction, the titles of the accounts involved, the amount or amounts of the transaction, the account number or reference numbers to which the entry is later transferred, and the explanation in brief but concise and comprehensible statement. I have here an example of general journal. So this is the standard form of a general journal page. Then let's proceed to the procedures in journalizing. Okay, so the first thing we need to write is the date. So the date at which the transaction occurred, and then also we can see the account titles and explanation. So the account to be debited and the account to be credited are recorded. The account titles are reference to the chart of accounts. Correct and proper usage of the account titles are necessary for a clear and accurate presentations of amounts in the financial statements. And also a brief explanation of the business transaction is included. And then the reference number. So the reference number of each account journalized. The reference column is left blank during the posting process. And then the debit column. So the debit corresponding amount of the account debited is entered. And then we can see the credit column. Okay, so it corresponds the amount of the account credited as entered. Okay, so what are the significance of journal in the accounting process? Journal shows chronological record of the company's transactions. Through journal, companies can easily detect if there are missing or unrecorded transactions. Journal narrates the different business dealings by date of occurrences. Second, it discloses the full effect of each of the transaction per entry. And then the journal serves as check and balance tool of the company by providing the transactions corresponding debits and credits. The journal also helps prevent and locate errors as the debits and credits can be easily compared. To illustrate the recording of transactions in the general journal, let us use the following transactions as an example. So we have 3 transactions for the month of September. So on September 1, 2015, Mr. Ben Mabait invested 500,000 pesos in a restaurant business by opening an account with Superbank. And on September 5, 2015, he purchased kitchen appliances for his business amounting to 100,000 by issuing a check. And on September 6, 2015, Mr. Ben Mabait started his operations and made a sales for that day amounting to 20,000 pesos. So these 3 transactions, we are going to journalize it in the general journal. And also try to remember this rule in for example in the asset account. So any transactions that increases the asset account, it will be debited, and any transactions that decreases the asset account, it will be credited. And for the liabilities and equity, it will be vice versa. So any transactions that decreases the liabilities and equity, it will be debited, and any transactions that increases the liabilities and equity accounts, it will be credited. Now, we analyze first these 3 transactions of Mr. Ben Mabait for the month of September 2015. So, we start with the first transaction on September 1, 2015. Mr. Mabait invested 500,000 pesos in a restaurant business by opening an account with Superbank. So, we have this word invested, 500,000 pesos. 500,000 pesos represent the cash of Ben Mabait. As I have said a while ago, that any transactions that increases the asset accounts will be debited. So his cash of 500,000 pesos will be debited. And then also the word here, invested. So Mr. Ben Mabait invested. So it means his capital account. So, Ben Mabet capital account will be credited. And then we write the brief explanation to record investment of Mr. Mabait. Then we proceed to the second transaction on September 5, 2015. Ben Mabait purchased kitchen appliances for his business amounting to 100,000 pesos by issuing a check. Check also is considered as cash equivalents. Okay, so he purchased kitchen appliances. So kitchen appliances is an asset to the business. So it will be debited. Kitchen appliances worth 100,000 pesos will be debit. Then at the same time, his asset account, okay, particularly the cash, will be credited because he used it to purchase the kitchen appliances. So it means his asset account at the same time decreases. And then we write down the explanation to record purchase of kitchen appliance. And then we proceed to the third transaction on September 6, 2015. Mr. Ben Mabait started his operations and made a sales for that day amounting to 20,000 pesos. So on that day, he made a sales of 20,000 pesos. So 20,000 pesos is cash. It will be debited. And then there's a word here, sales. So sales is an equity account. Okay, so it will be credited. So according to the rule, any transactions that increases the liability or equity account will be credited, and any transactions that decreases the liability and equity account will be debited. So his equity account increases by 20,000 pesos, so it will be credited. Okay, so this is how general journal look like. And also try to observe reference. The reference number will be left blank. So during the posting process or the transfer of these accounts to the general ledger, so that's the time we will put the reference number. There are some transactions, however, that require more than 2 accounts in journalizing. An entry that requires 3 or more accounts is a compound entry, and we have here an example of a compound entry transaction. So on September 7, 2015, Mr. Mabait purchased a motorcycle costing 80,000 pesos. He pays 30,000 pesos cash and agrees to pay the remaining 50,000 pesos on account, which is to be paid later. The compound entry is as follows. So we will try to analyze the transaction. So we can see here that the motorcycle costing 80,000 pesos, and then he pays 30,000 pesos cash in advance, and then he agrees to pay the remaining 50,000 on account. So when we see the word on account, so it means Mr. Mabait has an account payable to the store. Okay, so we will write first the date of the transaction, which is September 7, 2015, and then his asset increases. Okay, motorcycle So it will be debited. The 80,000 pesos will be debited. And then the cash, since his cash decreases, okay, so it will be credited. And then he has an account payable of 50,000 pesos, so his liability increases. Okay, so account payable credited. Okay, so as we can see here, okay, so the debit side and the credit side is equal in amounts. So the motorcycle is costing 80,000 pesos, and if we're going to check on the credit sides, the cash 30,000 pesos plus the account payable of 50,000 pesos. So the debit and the credit is equal. And then the brief explanation. To record purchase of motorcycle by paying cash and the balance on account. So this is how to do general journal if the entry is compound entry. And I would like to encourage you, the students, to check and watch our other videos on the rules of debit and credit, and the transaction received and the transaction parted with. It will help you a lot to be able to understand more on our subject. Thank you and have a nice day.